Whoa, welcome once more to this session, beautiful people. I hope you're doing great and you're awesome. Well, in this session, I'm going to teach you how to use. Actually, it's going to be the continuation of what we spoke earlier on regarding the daily, weekly, 1 hour and 15-minute swing point, right? It's gonna be based off of that, and I implore you probably to see and watch this kindling and see how it's gonna be very accurate on this one, because like I said, the only tool we're gonna be using it is our strategy. It's gonna be the Fibonacci, right? So, like I told y'all the last time, if you mark the swing point with let's say equal highs and equal lows, once you mark those swing point, that is where you're gonna uh, get your directional bias based off of those swing point and fair value gap, because most of the times what the market does is uh yeah, let me tell you first of all what's fair value gap or liquidity void, right? This is what they call a fair value gap. When you see the market moving up all of a sudden like this and without any retracement of a bearishness, that's what they call a fair value gap. And 9 times out of 10, you see the market coming back to feel that it might not happen soon enough. It might not happen real quick, but one thing's for sure, it's always gonna come back to fill that area. It's this fair value gap, and you see what happened. You see the market drop here. You see how the market drop here. Right? Reaching out the same area that the fair value gap began, right? So that's a fair value gap. So there are people that trade off just off this fair value gap, and there are people that trade liquidity void, and combined with all those strategies, the hour swing point based off of let's say uh, the 15-minute swing point based off of 1 to 3 to 4 days, the hourly swing point based off of 3 weeks, the 4 hour swing points are based off of 3 months, and so on and so forth regarding our last class. So once you join all that together, you see give you what they call accuracy in your trades. So you're going to see how your trade is going to be very, very accurate, right? And you see immediately it feels that fair value gap is rejected a little bit up before continuing down, right? So like I was saying, that's what they call a fair value gap. Now, as you say, when you go to the 15-minute, right, you mark up your swing points. I'm gonna do that real quick here. I'm gonna do this real quick. You mark up your swing points on the 15-minute. This is a 15-minute swing point I'm marking here right now. Like I say, I always do things live with you. I don't want to mark chart before coming up to them because I know what most of you can be thinking at times. So spare all of that. I'd rather do my things on the live while I'm teaching. It is what it is. There are people that will never appreciate it, and no matter what you do to please them, they will never so appreciate the effort you're putting in these tracks to make them understand what's going on. Right? I think Euro is a good buy right now. I think I'm gonna send this thing to my channel before we continue this chart. Oops. Yep, that's gone. So like you see this swing is point like everything here I marked them based off of what? Based off of what I taught you on the previous classes. And if you pay good attention to it, you're gonna see how it's gonna be accurate to this one and this session. And it's gonna mark most of your trade nouns and henceforth. It's gonna make you see the market like never before, right? This is another swing point that I forgot, but now we're on it. So these swing points are the things that are going to um, the things that are going to make and build your directional bias, right? Because it's based off of this swing point that you're gonna see your directional bias of where you want to be at. And these, if you watch keenly, this area is full of accumulation. The market has been building contracts over here. The market has been building contracts over here, and the market has been going up and down, up and down, up and down at this same spot. And there are people that can be trading this thing at the same spot and making real money based off of what I'm going to teach you right now, which is the Fibonacci tool, which you're going to use it. And if you use it when the market is consolidating, I bet you that you're going to make a lot of money out of it. And there are people that just trick the consolidating market using the Fibonacci and they're making money out of it, right? So, if wherever you're doing, pay good attention to these because it's about to go crazy right now. Yeah, it's about to go epic right now. So you know what I'm saying. So you see the swing position of Mark, right? If you take your Fibonacci, let's see, you take this Fibonacci tool, right? Let's not go far enough. Let's not just go far enough. Let's start little by little, and we'll be increasing the time frame. You take your Fibonacci from No, this is the recent swing point, right? You place your Fibonacci here, draw it to this swing point here, right? This is absolutely phenomenal. Like I said, you see, it gives you a sweet entry at the zero point 0.8 area with a minimum of 10 pips stop loss. I think you might put here, right? Now you don't want to be trading. Let's say you're an owner of a car, right? You own a car, you bought a car. Do you want to sell that car when that car is really at let's say $1 or $1? No, you want to sell that car when the car has attained its maximum price, like the optimum price. That's why you want to sell it, right? It's the same thing as this market. You cannot be you cannot be you cannot be buying over here at the premium, which is the price where you think it's gonna which is the maximum price in the market. You don't want to buy there, right? You want to sell it because you know it's gonna drop the value of that car that you're saying, or whatever you possess is gonna drop, right? So that's the same thing how these markets work. You see, it attains its maximum area, and then that's when you sell your car or whatsoever. So that's the same thing that the market does, right? So if you attain a maximum point like that, and this maximum point with your Fibonacci is what is called the premium or the bullish market, and it's called the discount on the bearish market, right? So you see the market, you saw the swing point that I put here, right? There was another swing point up here. I took the maximum swing points area, right? You see how the market come back. We're not going to take the 50% because the 50% is not that accurate. And if you hit the 50% and goes by reverse, like I told you, you're not going to get every single fucking move, and it's not a problem, right? You just need to focus on the things you're going to get, and it doesn't mean you won't make money out of it because you never caught the previous move. And just focus on the next move, and you're gonna see how accurate this thing gonna be for your side. And I bet you take this seriously. And I'm combining these all together with the previous classes which I've already recorded and I sent to you and you studied recently. And I bet you with this, I think you can start making money out of your trades and out of your strategy. I think this is enough for someone to start making money because I've already told you the four pieces of the market: reversal, consolidation, accumulation, distribution, all of that. I've already told you all of that. And now this is just to base how to take some entries and stuff using the Fibonacci tool, and with the 15 1 hour daily time frame on what you should focus, the previous class on what you should focus that I taught you about, right? So this is gonna cover everything and give you, if you just started just this few video keenly, I think your trading strategy is gonna start changing, and the way you start seeing this market will be changing, obviously, right? So you see the market coming back. The market, let's say this area never happened. You took a swing point here and a swing point here. You put your Fibonacci. Maybe you put your buy limit here, which is stop loss here. Should in case it drops, to take out this order before going up. Then there's no problem. You see the market come directly over the 0.786 Fibonacci level and bounce off of that. And you see how the market moved quickly to the upside. And now where should be your target? The target where your take profit should be at, it should be at the previous high where you place your Fibonacci at, right? Let's say you took your entry here to here. That's 50 pip. Not bad for a trade, right? Not bad for a trade, and I think is fair enough. Now it comes back, and not only that it does that, it hit your take profit at the previous high, and you see it goes few pips above to do what, and what is the market doing like this? It goes few pips above in order to run the stop loss of those who were selling this market before it drops, right? And now it drops again. Watch this. Watch this, ladies and gentlemen, beautiful people, with your attention on this chart. Watch this. We're gonna move our Fibonacci right now to the next swing area. You see, it took out this high here with the stop loss in the stop run, because that's what they call a stop run with a week. I've already taught you what a week is. It took out the stop loss with a stop run, and you see the market close back, the candlesticks close back, and you see the way the candlesticks are close, right, respecting themselves. It means they don't have any intention of going up than that. Now, if you take your Fibonacci again after what just happened, this was a new swing that just happened, and this was another new swing. Tell me you're not seeing this magic going on here. Tell me you're not seeing this magic going on here, ladies and gentlemen. Tell me you're not seeing it. This is crazy. This is phenomenal. And this is awesome, right? I know some of you may be like, what the hell is this guy showing me like this? Is crazy. Yes, it is. And yes, most of your mentors out there ain't teaching you shit about these. They don't know it yet. They probably teaching y'all trend lines and shit. But nah, they're not wrong. They're good. They're just basing themselves off of what they learned. You see what happened again here, right? The same swing position, the same previous uh high that took out the stop loss. It went for a stop run. It took it out, and now it did what? What happened here? What did I teach you that this is? Fair value gap, people. Fair value gap. And once they did a fair value gap, see what happened? It bounced again up the 0.786 area, and with a mitigation block, which I'm going to teach you what all this is all about. This is what they call a mitigation block, right? It bounces off this area. As you see it bouncing off this area, you see it goes back straight above, right? Damn, how crazy this shit can be, bro. Come on. You getting this now? You see how accurate this thing can be. Just using what, just from the few classes which I've already taught you, it can be very profitable with this. It's crazy, right? I told you on the first month probably you won't learn nothing, but on the second month, if you continue on the second month, you're gonna see how crazy this shit can be, right? And I told you, I implore and I beg you again, don't share this, please. Don't. If someone want to get it, let them come to me. Let them go through what you went through. Don't just give it away like something that you got for free. Actually, I could have been giving it this for free, but I told you success wouldn't be so good if it wasn't achieved through pain. You need to go through some little pain, and that little pain ain't nothing compared to the $100 you're telling me pay a month or anything. So the case might be, right? So you see how this bounces up what they call the mitigation block, what I'm going to teach you in classes to come, probably next month or something. We have a lot going on, people. There's a lot still coming. You're going to be amazed. You're going to go crazy. So you see the rejections over here, right? Now, if you already know what you've been looking for, again on the 0.786 level, you already know, oh, the market is doing the rejection, willing to go up, continue. And now you see the fair value gap over this area. And what you want to put your take profits is that it should be at the fair value gap, because you know at times you will not reach the previous high, and it might just fill the fair value gap and drop all of a sudden. And you don't want to be part of that. You probably want to just put your take profit at the fair value gap area. Then when you hit the take profit, you're going to see the market reverse on the other side, and that's not still bad for you, right? So if you do that, you see how the market is rejecting at this area, and you see a week coming down. It's still coming here, right? Maybe you miss this entry, you see the market go out with one 15-minute bullish candle, or you don't want to still buy here because you know it's still gonna go, or maybe you wait for the market to drop and respect this other block, this 15-minute bullish order block. You see how it wicked that area and it went back up, then boom, fill the fair value gap and drop again. That is a second example using up the Fibonacci and what I taught you on the previous classes on what you should focus on, right? That is a second example. And you see how mind-blowing this can be. Now, this two was just for a bullish market. Now let's take a bearish market right now. right? Let's see a bearish market. See this market move up, boom, the market move up. I'm always choosing currency pairs on a random, so that it should not be like I started that pair before I want us to go and started that blah 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 blah. I want to stay up the stuff coming, right? I want you to see how the shit work. And if you trust me and believe in me, oh, I'm happy you did, because it's getting you where you want to be at, right? So for the bearishness, you see, this was a swing, this was another swing, and now you take your Fibonacci. Instead you are putting here to here as you did. Now you put the reverse, you put it there to yeah. Oh damn. No damn. And I say damn again. You see that? You see it? We see what's going on the bearish market. Same thing. It did what? You took the Fibonacci on the reversal, and now it went back up to 0.7867 level. You see how accurate this level can be on this on the sniper entries, right? You see, hit that thing, respect the premium area, right? Like I told you, on the bearish market, this is premium. On the bullish market, this is premium, right? So you see the market reverse, immediately it hit this. You see the market dropping, and like I told you, where should your take profit be at? Your previous high, or your previous highs, or your previous lows. We see the market coming back, coming to the 15 level, respecting this order block, dropping, taking out the previous low. And I told you should focus your take profits as you should be at the previous lows. Then you see how we respect that shit, and it takes out the previous low. And watch this. Watch this. How amazing it is. Took out the previous low. Not only it took out the previous low of this, it took out this other previous low, and it went back to the first swing position that we did. You see, and it took out the previous low was the swing position, and now you see the market going chopping, like consolidating now, right? And this consolidation, I bet you, is a setup. For those who don't know what's about to happen, this consolidation is a setup, right? You see how it's respecting this other block here. Now, if you take your swing, you see this has been a consolidation. Now, you see this as a consolidation, right? You already have your directional bias now. You see it has dropped. Now, what you think it's gonna do? The next area that liquidity is the previous high that it come from, right? So that's how you get your directional bias most of the times, right? And that's how I took this trade. Like right now that I just sent to my group. I even took it 5 minutes or 3 seconds just after looking at the chart. And you see my charts are virgin. You don't see anything attached to those charts, right? They are the way they are, right? Unless I'm teaching you, or unless um teaching you what to do, that I'll have to put some few information, like you should see what's going on. Now you see the market going, accumulating, creating a previous high and a previous low here, right? So you see another swing position over here, in here, and in here, right? To take a Fibonacci again after this accumulation period, this is what you want to do. You know, this is about to be a bullish market, so this is what you want to do. You do this and that, right? You see the market dropping again. Like I told you, you want to do this. Don't care about the week. Focus on the bodies of these candles, right? Because you see the week come up to the 0.786 level, but see the market running back up and closes above the 0.786 level, right? Still giving you an optimum trade entry, telling you what the market is going bullish. The market is going bullish, ladies and gentlemen, beautiful people. Thank you for your attention. Now it's going crazy. Wow. Yep, I'm telling you this. And I'm amazed by this. When I learned this shit, man, that's where my brokenness is. So it's worth it. It's worth the try. It's worth the time. I think this is gonna kick you out of your 9 to 5 jobs and stuff like that. If you focus on this, you'll be good already to start going. So you see how it goes up, it comes back down. This is a swing point. It drops 7.8 level. Respect the barrier, the bullish order block. Respect the closes above, and you see the market run up. And like I told you, where should your take profit be at? Previous high, previous high, previous high. It hits all of those. If you wanted to put your previous high here, previous high should be here. It took them out. And once you took them out, now what happened? What have you seen here? Let me remove this Fibonacci, let it be clear. What have you seen here? The market was accumulating, right? What did it just do? Break in the market structure. Now, as it break the market structure, it took out the highs of this previous hand and dropped a little bit. Now, once you see the market breaking market structure, it already tells you what it's going to do next. It drops a little bit. This is what they call the retracement. And now, if you combine everything that I've told you, you see, this is expansion, retracement, and it's about to go crazy how an expansion is coming very soon. You see the market retrace to test out this break in market structure before the next move proceed, right? So that's how it is. And the next target is still gonna be the previous high, and this previous, right? So that's how it is, ladies and gentlemen. Oh, this is crazy. This is amazing. Focus, do what I'm telling you to do. See how accurate this can be. And I bet you your way of seeing this market or the trading strategy is going to change off of this, right? So, with that being said, everything being equal, focus on this. Focus on this no matter what. Just this few video can take your trading to the next level. You see, I tell you, this what happened here was a run on stop losses, right? You see the market drop in order to take the stop, run the stop of this previous low. And I told you 9 times out of 10, you need to focus on the previous low of the daily previous highs and low, the hourly, the 4 hour previous highs and low. Focus on those. That's how you're gonna get the reversal part, and then you're gonna conclude or take a trade based off of that. And you shouldn't be in a hurry or you shouldn't be hasting in order to take a trade. If you don't see a setup, sit down and wait. It's not gonna kill you. It's better waiting than losing money for no good reason, right? So it's better for you to sit there and wait for your setup. And once you see your setup, then you can. I don't want to say over leverage, but you can risk 5% of your trade, knowing fully well what you're doing, and that's gonna be good money for you, though, right? And it's gonna keep away your 9 to 5 jobs and keep you still going and rocking no matter what. You know what I mean? So what happened here was a run and stop us, and you see a long wick that happened over here with a small body, telling you what the pressure of this market is bullishness. If you don't want to take, if you are scared in order to take this, to take a buy here because you're seeing the market dropping, you see that how can I be buying when the market is dropping? That's crazy, right? But what you want to do is you want to develop the mindset of the institution. That's how to do. They show you that they want to sell, but they buy, and they show you that they want to buy, but they sell. That's the craziest thing about this market. So if you're scared enough to take a buy at this position because you see it dropping, you say, nah, I can't buy this shit when my mentor's telling me buy it when it's dropping now. You see, but wait, okay, you can wait for it, and once you wait, you see the 15-minute candle comes back and closes it, and now what does it tell you? This was a run on stop loss, and it's about to continue going back up. And where should be your target? Equal highs taken out. Equal highs run out. Previous highs should be your target. Previous excuse me. Previous heights should be your target. You see, previous high, and now another high is formed with another swing, which is formed here to here. But I don't want to take this because we have already seen this breaking market structure, and anticipation is that's going to continue going back up. Uh, Up, and target most of all is here, because if it goes back up, I want to see it continuing going back up this point. Actually, that's why I like swing position, because if I put a swing position here, is to take them out here. Actually, because if I put a swing position here, it's to take them out here. Right? It's to take them out here. Oh shit. Crazy. Yeah, if I put a swing position here, it should take profit here. Oh, here. Alright. That will be my take profit. Yeah. On Euro USD. I want to see these be my take profit. With this type of a swing position, right? My take profit should be, I think this is 200 and 300 pip, right? Just one trade is good enough for the week. You can just take this trade and boom, and let me send this shit tomorrow. From China. Yeah. Woo! I guess we'll have a great class so far, and I think your mind is going up crazy right now, you know what I mean? So yeah, that's how I take my trades, and that's how I do what I do. And the last 6 months of my life changed, and I'm out here teaching you, and I'm pleading that you shouldn't teach anybody else, because this will be your bread and butter. This will be the story of your lives. Another one for the team. Right? So with that being said, I thank you for your time. I thank you for hopping on. Thank you for watching the video. See you on the next session. And stay blessed and stay safe with the coronavirus.